Good morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, October 19th. Okay, so we got a little bit of movement to the upside again, and that's how it works. One day down, and that's pretty much it. And powers that be want to get that market right back up to where it was again. Even though the markets are looking like they're tired, they are breaking down. We have the final debate, which would be tonight at 8:30 p.m. Going to be interesting to say the least to see what happens. Nonetheless, pretty much, I believe that a Hillary Clinton win is already priced into the markets. Maybe get a little bit of a pop, a knee-jerk reaction, but I do believe that markets at one point in time will start to sell off again. Nothing good about either candidate. Again, it's not my political view. Just Hillary gets in, it's going to be a gridlock in Congress. Trump gets in. As you all know, Wall Street doesn't really want a Trump win. They'll sell the markets down as well because of uncertainty. So either way, I do believe the markets will sell off. There's a lot of bad things going on out there, and they're just keeping this market elevated as long as possible. Deutsche Bank coming out, with their leverage. They just mentioned that I read on the internet that by a very good analyst, they're 40 to 1 leveraged, 40 to 1. And Lehman, I believe, was 22 or 25 to 1 leverage when they went under. So they have tons of derivatives on their book, so they're worldwide spread in many other banks. So there's a lot of bad stuff out there, and that they don't want any one of us to know, to be quite frankly. But the bottom line is, let's see what we see. We trade what we see. And right now, it's just been a bunch of hogwash, a lot of upping, backing, and filling, up and down, price action, and really not going anywhere since July, for that matter. Other than the Brexit lows, we rallied in July and pretty much went stagnant the rest of July, all of August, all of September, and pretty much all of October, other than a couple of down days we had, and then we went sideways. So the markets are waiting for this election to be done. There's a couple of big moves that I'm looking for. I'm looking for lower prices in crude. I'm looking for a big bounce in oil. I'm looking for lower prices in bonds, and of course U.S. equities lower. Now again, that's all within a certain time frame. It's not right now you go out and sell crude oil and buy gold and sell equities. They're all going to have their prospective time frames, and that's what we're going to be monitoring as we go along. Let's take a look at the dollar. You can see here we're at 25.30. We're above resistance, which is now support. You can see that here. The next area on this downward arrow is going to be this next swing high we need to take out at 25.60, and I do believe we're getting there. We're backing and filling now. We're pausing and digesting this move coming off of the symmetrical triangle. Now, speaking of oil, let's talk about that real quick. Crude, we're sitting at the upper end of the range. We had this big move up based on this OPEC meeting in November. So what happens is the algorithms, they come in and they buy it, they continually buy it. They keep this market well elevated and bid up for this move, but they really don't realize what happens on the fundamental side. Baker Hughes rig count last week up plus 16, so there's 16 more rigs that went online on Friday, as of Friday's count, okay? We have 10 to 12 major oil vessels sitting out parked at the Mediterranean Sea, let alone here in the States, which we have an unknown count. You have a build last week. We had a draw yesterday night and the API number, and we'll probably have a draw today and a DOE number. So all of a sudden, how can you go from a build from one week to a draw the next? We had a build of 4 million barrels, and last night's number was a negative 3 million. So we used 7 million barrels in 1 week. And we had retail sales were slumping, so no one's really moving, meaning going to the malls and going out to dinner, and a lot of these dining stocks are actually doing quite poorly. So you have to wonder, is this just another way that the markets are being propped up and elevated until this election is over? Okay, now remember, if this meeting falls apart in OPEC, you will see a major flush down to at least this 200-day moving average, if not down to this 50% retracement here. So you have to be very careful. Personally, I'm a better seller than a buyer, but I would not touch this right now until we get below 49.60, or we have a huge spike up into the 53.5, 54 area, and then base, and then break down from there. Then I would start looking at it short, but I would not touch this right now. I wouldn't even touch it long, to say the least. Next is going to be gold. Gold here, I'm looking really constructive on the long side. we're basing here in a 38% retracement. I would have liked to see a better base, or a bigger base for that matter, before we start to attack these upper end of these resistant bands here. You have the 20 and you got the 50 up the top, and you got this horizontal resistance area, which is now resistance at 1300. So I would have liked to see one more flush into the 1220, and I think that would have been really got an ideal high risk reward, higher probability trade, if you will, at the 1220. But again, you're below 1240 here. That 1242 is that low. 1240 here would be your stop if you're looking to take this to the upside. Okay. Next is going to be the GDX. Same thing here. You can see below this couple of pennies. Let's call it 2240. If you're looking to buy GDX anywhere in here, the momentum averages are looking quite constructive. They're looking better. But I like to see us break above the MACD, above this trend line, lower trend line, and start basing back up above, and then start to go higher. Okay. But I do think that this is going to be pretty much a dead cat bounce before we move lower at least one more time. But again, I do think that this is a second stage bull market for gold. There's going to be a lot of uncertainty, and gold's going to benefit from a lot of this uncertainty and the flight to safety. Okay, same thing with the GLD here. We'd love to see this 115 area. Sometimes you don't get it. If that's the case, you break out, we back test towards this base, then I would be a better buyer here as well. That's going to confirm the base is in, and then I would look for that next pop up aside. I would sidestep this little rally and then go from there. Spiders next here. You see we're just back testing this pennant. We did break down twice on this big bearish rising wedge, but remember, that's what the powers of B want us to do. Break down twice, and that's it. Then you're back into the range, and we were rallying. Remember, we had Netflix come out 2 days ago after hours. They blow out earnings. Their burn rate is 2 months with billions of dollars, but they still rally the market. And yesterday, Intel comes out poorly with their numbers, and market sells off at the end of the day, but now rallies, and we're back up 75 cents. So go figure, guys. Everything is one-sided here, all right? And that's what we have to deal with and have to understand. So just don't get caught up in the propaganda right now. Spider 60-minute, you could see here, guys. And this is the TMT Pro Trader Premier video I want to show you guys. Excellent levels. You could see here how we held. And if you knew that this was going to hell, or at least you had a good idea it was going to hell, or going to hold, what would you do? You look to buy into this, or you would look to sell into this rally, all right? And that's what our TMT subscribers are doing. So come check us out, TMT. Go to our website at tradingmarkettechnicals.com, or check out our Facebook page. IYT Daily, you can see here we're starting to break down lower lows, lower highs. Right now it does look like a little bit of a bullish falling, a bull flag, I apologize. But we're starting to roll over here on our indicators. So if we start to break down in the transports, that's going to help the bearish case as well. IWM Daily, you can see here we really haven't gone anywhere. We've been down, we've been up, but still within this base of 121.40 to 120. So still messing around in this area here. But again, doesn't look really bullish, does it? I mean, this does not look like a very bullish pattern to me. And last is the Qs. Defying all gravity here, still holding on. But let's see what happens with Intel's report from yesterday. If the markets sell off, or they decide they're going to just ignore it like they have been. So any bad news in the markets, they just totally ignore, and any good news, they just continue to prop the markets up. So to me, that's a dangerous market if you're holding stocks. So be careful out there. Have a great day. We'll see you tomorrow.